Hi, it's Mike Lynch with AmeriFirst Financial, and it's time for your Monday morning mortgage update for the week of May 3rd. Happy May. Can't believe it's here already. I hope you all had a great weekend. I had a great weekend. It was the first day on Saturday of the May Bike Challenge. In Shasta County, actually, it's a national movement where different communities create teams and you try to accumulate the most miles on a bike in the month of May. We have a great team. Last year, we got first in our size of team. In Shasta County, I don't know if many of you know this, Shasta County was like number 2 or 3 in the country for the size of its county, but this is everywhere. And if you're looking for a team, if you're riding a bike or you want to get out and ride a bike and you're looking for a great team, I invite you to join our team. Click on the link below. Don't Stop Pedaling is the name of our team, and the more we can have, the better, and maybe we'll win some prizes again this year. All right, so let's talk about the market. What happened last week? Last week was very similar to the week before. Really no change. The rates were flat. They started the week pretty much the same way they ended, and they're still incredibly low, as we all know. So continue to talk to your buyers and sellers about how great these rates are. So what are we looking at this week? 3 things: jobs, number 1, inflation is number 2, and taper is number 3. So jobs. Huge jobs weeks this week about it really reports and data coming out about jobs. And a lot of it's going to be released just every single day, with the big release coming on Friday. Employment, wages, jobless claims, non-farm payroll, unemployment numbers, hourly wages, just a whole bunch of stuff coming out this week. So Friday's the big week, Friday's the big day, and we're really floating into Friday probably, or Thursday. But one thing to keep in mind is the lower income really has not been counted in a lot of these jobs reports over the last months, because they're the ones that are mostly getting the assistance, the stimulus assistance. 17 million people, over 17 million people are actually getting assistance. So what happens if the jobs report starts to show these lower income people actually earning or back in the workforce? That's going to show more jobs. When we see a stimulus to the economy, people getting back to work, having consumer confidence, that's good for the economy, but that's bad for mortgage rates. So we're going to be watching those jobs reports. Inflation, been talking about inflation for months now. We know inflation is not great for rates, for mortgage rates. So think about it this way. If I have a $100 million bond and I'm guaranteed a 4% rate of return. So bonds are typically backed by the US Treasury, lower rate of return, but safer than the stock market. So I'm guaranteed a 4% rate of return on that $100 million bond, or a $1 million bond, whatever it is. And if inflation is 1%, my actual earning is 3%. Pretty straightforward. Now, if I still have that $1 million bond at 4% rate of return, or 100 million, or whatever it is, and now inflation climbs to 3%, now my true rate of return is 1%. So in this situation, when we see that inflation go up, those bond yields, which is in essence rates, climb as well, so that you can get your guaranteed return. That's why inflation is so bad for rates. So the other thing about inflation is that the Fed does not want inflation to go up. They want it to stay down. Why? Because businesses need to borrow money at lower rates, because when businesses borrow money, they grow, they pay more taxes, and that pays for all the money we've been spending over the last 15 to 16 months. Even Warren Buffett this weekend came out and made some very strong comments that he believes rates or inflation is on the way up. So there's a lot of news, a lot of indication that we're going to see inflation increase. I've been talking about it for months now, that we're really going to see this inflation increase, maybe up to over 2.5% into the summer. There's something else that's interesting: size inflation. Have you ever heard of that? Size inflation. So you may be buying toilet paper at the same price, but look at how many fewer sheets you're getting. When you buy shampoo, is it less than a half ounce less than it used to be? You buy a Snickers bar, same price, but now the bar's smaller. So size inflation is a real thing, and we're starting to see it more and more in the stuff and the products that you buy. The last thing is taper. What is taper? Taper means that the Fed is going to start buying less mortgage-backed securities. Now, we all know the Fed's been buying a ton of mortgage-backed securities since COVID started to artificially keep mortgage interest rates down, because if they buy more of these mortgage-backed securities, the rates stay down, the trading is increased in that bond market versus where mortgage rates are determined. So it's all a good thing. So what happens if the Fed starts to taper, meaning they're going to buy less of these mortgage-backed securities? Now, they haven't talked about this. They haven't wanted to talk about it. But over the weekend, the ECB, the European Central Bank, announced that when they see a 70% vaccination rate and we get into that herd immunity, they're going to start tapering on their side of the pond in their economy. So we're all connected. Does that mean that maybe some Fed members that are, or there's going to be a lot of speeches this week, are we going to see maybe a shift in their position, a shift in their expectation? Are they going to announce maybe when the Fed will start tapering? Because eventually they will. The bond market, the bond trader is going to be paying close attention to this. If we see any change in position, this could cause those bond traders to sell off. We could see rates go up. So a lot happening this week. Really a heavy economic week, very similar to last week, with most of the volatility happening at the end of the week. So we're going to start out the week floating, really watching Thursday and Friday. And if we see any movement, we'll lock our clients' rates. So if you or your clients have any questions about mortgage rates, give me a call. All my information is down below. If you have any comments about this video, I'd love to hear them. If you know somebody that benefit from this, go ahead and forward it off to them. Have a great, productive week, and we will talk to you soon. Bye-bye.